Hey everyone, now that we have almost completed Q3 results, I've identified a few companies where the results are pretty decent but the share price has corrected significantly. Or they have some short-term issue due to temporary external or internal reason that has resulted in a good correction in their share price. So as a long-term investor, these stocks are looking attractive to consider adding in a systematic manner in my opinion. Again, this is not a buy or sell call. Please do your own research before investing your money. And my videos are only useful for long-term fundamental investor. If you're looking to make quick money in the next few months or quarters, unfortunately, this is not the right channel. Alright, let's get started. So the first stock is Praj Industry. In Q3 results, company's revenues have fallen by around 9%, but overall margins have expanded from 9% to 12%, resulting in net profit growth of 13%. The reason for fall in revenue by 9% is due to the recent government ban on use of sugar syrup for ethanol production that impacted the order for Praj Industry. Although this is a temporary situation, management in their latest con call mentioned that due to these sudden policy changes, we witnessed a very unusual quarter with no order finalization for the sugar-based ethanol plants. However, we strongly believe that this is a temporary situation. Interestingly, Praj also offers solution to extract ethanol from multi-feedstock. So Praj is also working with customers to convert their existing single feedstock plant to multi-feedstock. In the recent development, Praj has started a sustainable aviation fuel facility that would be used in airplanes and can be useful for decarbonization in the aviation sector. Considering the government push for biofuels, Praj can be a strong beneficiary from it. For the long term, management has guided for 3 times growth in the revenue by FY30. Management in the latest con call mentioned that fermentation is going to be a big technology. Overall, both even international market and domestic market, the drivers are all in positive direction. That is why I am so confident that the 3x direction guidance that we have given will be met without any problems. If you look at Praj's historical performance, its revenues have grown nearly 3 to 4 times in last 5 years and profits have zoomed nearly 4 to 5 times. Interestingly, DIs are also adding Praj big time from 7.6% to 13% in last 4 quarters and public holding has consistently fell down from 46.9% to 36.7%. Currently, Praj is trading at levels of below 500 with P/E ratio of 32 and market cap of about 9,000 crore. Its share price is corrected around 25% from its peak. In case you want to understand Praj business in detail, I have done a few videos in the past, do check them. By the way, I have tracked more than 200 companies and discussed their quarter result in my exclusive weekly video series for long-term serious investors and also shared an Excel sheet. In this weekly series, I also share my own investment strategy and stock I am adding in my portfolio, along with keeping a close eye on the market. For example, in my latest video, I discussed my viewpoint on power and PSU stocks that are in hype currently, along with many quarter results. In case you want to explore them, you can visit my website. Then second stock is Aavas Financials. It's a leading player in the affordable housing finance segment. And I mentioned it in the past that I am bullish on the affordable housing finance segment. In fact, I did a detailed video on potential in affordable housing finance sector and key players in this space. I also did a couple of detailed video of Aavas in the past. So if you look at Aavas journey, company has grown leaps and bounds in the last 10-12 years with AUM growing from 0 to 14,000 crore. This data is in billion rupee. The number of branches have grown from 25 to 346. Company has divided its growth journey in Aavas 1.0 between FY12 to 16, then 2.0 between 16 to 23 and now 3.0 where company is scaling and institutionalizing with number of CXOs growing from 4 to more than 10. In terms of share price, Aavas zoomed exponentially post its IPO generating multifold returns. However, from the highs of Rs 3,000, Aavas has fallen more than 50% to current levels of below 1,400. In the process, company's valuation has fallen from peak price to book of 10.8 to current price to book of 3.2, making it attractive. The question is, why Aavas has corrected significantly, especially in last few quarters? And there are 2 reasons that I mentioned in my last video as well. So first reason is management transition. Aavas had a change in leadership in its 3.0 journey with Sachinder Bhinder as new MD and CEO, and whenever there is a change in leadership, it takes time to gain the investor confidence. On top of this, the major reason for such correction is due to slowdown in its growth. So if you look at company's past performance, it has grown at extraordinary rate across your AUM, disbursement and profit after tax. However, company is facing slowdown in last few quarters. If you look at its latest Q3 performance, its AUM is up by 22.8%, which is pretty good. However, its disbursement is up only by 7.2%. Profit after tax is up by 14.6% and company's NIM, that is net interest margins, are also facing pressure. So the key reason for slowdown in disbursement is due to technology transformation. Avas is upgrading its technology in its 3.0 journey across departments. That has resulted in slowdown. This tech upgrade is happening in phases. So eventually, when entire tech upgrade would happen in next few months, Avas should come back strongly. Management in the latest con call mentioned that the phase 1 of LOS and phase 2 of LOS, which is the loan origination system, has gone live. The second system, which is the loan management system, is under implementation and it will take another 3 to 4 months for us to get it live. I think once all of the three systems are live together in the coming 3 to 4 months, we'll see a real tech initiative transformation benefits really flowing in actually. Now, if you look at its shareholding, DIs are buying it big time in every quarter since the last 10 quarters. Although FIs are the net sellers in the last few quarters, and public holding has also slightly increased. Currently, Avas is trading at around 1400 rupee with price to book of 3.2 and a market cap of around 11,000 crore. I think this is looking very promising to consider for long term in a systematic manner. Third stock in the list is Tanla Platform. I recently did a detailed video on Tanla Platform where I explained the reason for recent 20% correction in its share price. Company posted its Q3 results where its revenue stood at 1002 crore, up 15.3% year on year, EBITDA stood at 192 crore and profit after tax stood at 140 crore. Now the numbers are looking pretty decent, but the catch is this result also includes the inorganic growth from Value First acquisition. So excluding Value First number, company's revenues are up only by 5% and quarter on quarter it has been flat, where normally Q3 and Q4 are growth quarters for the company. So overall the numbers were a bit disappointing that resulted in correction in share price. After the correction, Tanla is now trading at around 950 with a PE ratio of around 24 and market cap of around 13,000 crore. That looks quite attractive. Especially its digital platform business is looking promising with launch of Wisely ATP. That is anti-phishing platform where company has recently won the deal with one of the large Indian bank. And this could be just the beginning. So worth keeping a close eye. And if you want to learn more about the company, do check out my latest video. Now fourth stock is Gravita India. I remember discussing Gravita India last year when it was at levels of around 570 and then it touched high of 1170. But now it has corrected around 25% to current levels of 880. So Gravita India is a leading recycling company that started with recycling lead from used batteries, scrap metal and other waste material and has now expanded to plastic recycling, aluminum recycling and rubber recycling. In addition, company offers two more services. First is customized and value-added products like lead alloy, lead sheet, lead brick, then aluminum alloy, plastic granules, and company also provide recycling solutions like lead rotary furnace, lead refining pots, alloying furnace, pollution and fugitive emission control equipment and so on. As far as future growth potential is concerned, one of the biggest themes for 21st century is sustainability. Every country in the world is focusing on reducing the carbon footprint and sustainability is the core of every business. Gravita growth would also be fueled by government policies around waste recycling. Indian government introduced the battery waste management rule in 2022 to ensure environmentally sound management of waste batteries. This mandate is expected to increase the volume by 2 to 3 times for organized recycler going forward. Then government has recently introduced vehicle scrappage policy where all government vehicle older than 15 years will be scrapped. This would result in more availability of domestic scrap. Moreover, there is another key trend of recycling business shifting from unorganized to organized business. Gravita is also growing consistently in last 5 years with revenue growing 3 times in last 5 years and profits up nearly 5 times. Management has set a vision 2027 to grow its revenue by 25% CAGR and profits at 35%. ROC at more than 25% and 50% coming from value-added products and around 25% from non-lead business. So in latest Q3 results, company's volumes have shrunk by around 7%, revenues have degrown by 4%, although company PAT is up by 20%. Company mentioned that the reason for correction in volume is due to logistic disruption. Company would be investing around 600 crore by FY26. Now after the correction, company is trading at PE of around 26 with a market cap of around 6,000 crore and worth considering for long term. Fifth stock in the list is Affle India. Again, it is one company that I really like and discussed multiple times in the past. Affle India is basically a tech platform company that helps enterprise in their digital marketing initiative via mobile advertising, helping them convert users using their proprietary algorithm. If you look at its Q3 results, its revenues have grown 32.6% year on year, which is a great performance. EBITDA is up by 20.3% and PAT is up by 11.4%. If you look at the share price, Affle India jumped significantly during COVID period due to digital boom, but then it has been consolidating since the last 3 years. During this period, company's P ratio has fallen from peak of 160 to currently at 57. Now, FL India has grown at a very fast rate in the past, with revenue growing nearly 10 times in last 5-6 years and profits also growing 10 times. Although there is some temporary slowdown in growth, I think that the long-term growth prospects are still intact. Hence, at current levels, FL India has a good upside potential, and for the long term, this can be a good opportunity because of companies' focus on digital marketing, which is the future. Again, I discussed the growth prospect of FL India in detail in my last video, so don't want to repeat it here. Now, sixth stock in the list is Mrs. Bector. It is a leading manufacturer of biscuit and bakery product with brand Cremica and English Oven. Company has been growing consistently in last few years. That is also reflected in its share price. However, after the latest Q3 results, there is around 25% correction in company's share price. So in latest result, company's revenues have grown by 17%, EBITDA is up by 19%, PAT is up by 25%. In fact, considering the slowdown in biscuit segment where competitors like Britannia has posted significant underperformance, it has been a stellar show from Mrs. Bector in my opinion. So this current correction looks unjustified to me. The only reason I could see is that the stock has run up a lot in last 1 year and hence seen profit booking. Although I am yet to see the management guidance for near term, but just by looking at the results, I think Mrs. Bector has done very well and share price correction has only created opportunity. Company has grown at a very good rate with revenue growing around 2.5 times in last 5 years and profit growing nearly 4 times. Mrs. Bector is well positioned to benefit from growth in both biscuit segment and the bakery segment with its tie-up with top QSR chains in India. Now, final 7th stock in the list is IDFC First Bank. IDFC First share price has rallied last year, but then share has corrected around 20% from its peak in last few months. Company has posted a good set of Q3 numbers where its advances has grown at 24.5% year on year, customer deposits are up by 42.8% year on year, asset quality is very good with net NPA at 0.68, core operating profit for 9 months of FY24 is up by 34.7% and PAT is up by 36.6%. The only weaker side is its lower profitability with lower ROA and ROE and rise in provision in Q3 by around 45%. After Q3 result, management has also published guidance for next 5 years, where the target is to double the branch network, grow deposit by 24 to 25% CAGR, grow advances by 20% CAGR, increase return on asset to 1.9 to 2 and return on equity to 17-18%. And net profit target is around 12 to 13,000 crore, which is nearly 5 to 6 times its current profit. In fact, management mentioned that the advances and deposit growth guidance is on the conservative side. I recently discussed IDFC First where I covered management guidance for the next 5 years in detail. Currently, IDFC First is trading at levels of around 80 with a price to book of 2 that looks quite attractive. So this is the list of companies that I find promising after recent correction in share price. Now, there are a few companies that have posted weaker result that I want to study further and then cover them in the upcoming videos. However, there are a few companies that have posted excellent results. Now, many of them are already trading at all-time high, but still some of them looks attractive and worth considering. So let me know if you want me to cover companies that have posted excellent Q3 result and looking promising. On the individual stock side, I recently asked about which companies you want me to cover after Q3 results and received a lot of response. So I've already started covering them and would be covering few more in the near future. So this is it for this video. If you find it useful, do share it with your friends. I'll see you next video. Till then, if you have not explored my exclusive community, you can visit my website. Link is in the description. Take care.